6/4/2020, we have the weekly Dow Jones, and we're hitting some of our targets, and we've already talked about those in our last updates. 26,500 is going to be the upper target. Now, I just want to caution everybody is that we are in the cycle a little overbought, and I can just tell you that up front. And so once we're up here, does the money come off of the sideline? The chart is a bull market chart. So the virus pandemic is off of the table as of right now during this window period. I will caution everyone, though, that we are in seasonality changes. And, we're at the top of the market again. The Fed stimulus and all the packages, reopening of the economy. I can tell you this morning that initial claims were filed again, 1.8 million. There are lots of things that we can talk about as far as the numbers aren't good. So what? When you have the Fed moving the market, you go with it. And I can say in individual ranges and rotation in the S&P and other sectors are going to start happening. So this morning, we're going to see that when we gap down, we're going to see that the support level on the Dow could be held at 25,921. And not only that, is that when that gap does come down, is that where do the buyers come in? And what kind of algorithms will be in play for the public trading session? And the option pit today will be a very good day because we're going to have stocks that are overbought that are going to come down. We've got stocks on the call side of the market that have had great runs, and that side of the market, it will also come down. Then there'll be opportunities off of the bottom. So on the weekly chart for the Dow, it's bullish, and the Federal Reserve has done their job. They bought ETFs, they bought credit, they bought everything it could take. Now that the honeymoon is coming to an end, is when we reach these overbought levels in stocks that have had great bull rallies, is when do they start to fall like a rock and pull back and set up. So when we're examining the market today, we're looking at the put to call ratio. And when the put to call ratio gets out of whack during a bull run, this has been a bull run, and we've had that 4-week breakout that started right here, and it started on 5/11, and it hit the 10-week moving average, and we've gone straight up, and now we're hitting the major 50-week moving average. The 100-week moving average is right here, and we're slightly above it on a weekly level. The volatility will return. The bull side, when stocks correct, they come down, they hit support levels. We'll look at buying those and taking those higher. So once again, it's going to be what that bull market sentiment will be like when you reach levels. And we're not, really overbought yet. We are getting into that level. And just everyone beware is that the last 4-week breakout has happened. And so now it's time to be cautionary. So for the stocks that have had the bull runs and the call side of the market is paid, those are reaching their highs now, and they're going to come down. So once again, to all of our market makers and traders around the world in our trader network, you've been being updated regularly and daily. And so once again, on the Dow, as we start the day, we're going to look and see how heavy the support levels will be, and then the top end resistance on the Dow and the broader market, S&P, NASDAQ 100, semiconductors, software sectors, airline sectors, rotation in the marketplace, rotating maybe out of some of the higher tech into some of the more beaten down areas. Are airplanes going to fly again or not? It will be a very volatile day. Once again, all key indexes are reaching up toward the high end of our price channels, and price targets have been hit. Now we're going to see what the market is made of today.